if you look at the broader macro news has been relatively positive. If you look at the numbers put out by government, we saw quite strong growth coming into end of half one, sort of 6.2, 6.3%. The bigger challenge, and I think that has really been driven by the fact that food prices have been relatively low. We've had good rains, and whenever there's good rains, then even things like food prices are kept under check. Inflation has been relatively at a good level, just around 5%. It's crept up with the new fuel taxes which came in September. However, there's a concern about the fiscal position of the government, and there's obviously been quite a bit of growth in the debt, and we've been running twin deficits for quite some time. They both seem to have come down, both the current account deficit and the fiscal deficit. There is a concern, especially with the growth of the debt, the maturity profile of the government debt. There's quite some number of repayments expected next year. And I think that, with the fact that also we don't live in isolation, the international markets are also behaving very differently. The US has been performing very well. We've seen a lot of funds flow back into the US. We've also seen a lot of concerns about emerging market economies, be it Turkey, be it Argentina. So there's been significant pullback. And that has obviously affected our market. We've seen now that for the first time in a lot of years, we're having net outflows out of this market. And that has affected trading volumes and value on the Nairobi Stock Exchange. So that's a concern. We also see the comments of the IMF, I think especially in the last month, have not been very helpful about the management of the exchange rate. I've not seen CBK's response to what the IMF put out, but obviously investors everywhere look at what the IMF has to say with a great degree of seriousness. And if they say your currency is fundamentally weak, it's a concern. And we've seen over the last 2 weeks now the shilling has sort of started depreciating. So certain concerns about obviously the twin deficits, which is what really leads to the weakness in the currency and the ability for government to fund a lot of the projects going forward. I think it will have a significant impact. Firstly, you're looking at mobilizing another, say, 5 to 6 billion shillings every month, 60 billion shillings a year, which is then available for investment. Because even as you collect the tax, the contribution, you don't use it at a go. Two, there's an underpin. The government is saying for those who do not get to utilize the fund, after 15 years, you'll be able to claim back your money plus a return. So that funds has to be invested. Now, it can only, to my mind, it would have to be managed in the same way pension funds have been set.
So this is really a new window for you.
So it's a new window for the asset management industry to offer that service and help government manage that fund professionally. Because some of the concerns people have is, will this money be managed appropriately for the benefit of housing? So one has to create the right structures to ensure that the purpose of the fund is intended. I would look at it in twofold. While government needs money to fund its budget, to me, it's a temporary plug, because you'll collect the proceeds today, and then what happens tomorrow? There's 2019, 2020. You may not be able to bring that. So it just temporarily helps the government. But the bigger concern is what is the nature of those companies they want to privatize? Are they attractive investment opportunities? What are they really selling? So when I look at the list, there are obviously some companies that will certainly attract huge investor interest. But there are also quite a lot where there are a lot of question marks about the viability of those businesses, and is government prepared for the restructuring cost? We've read about sugar. I mean, the sugar companies, they've been trying for the last 10 years. There's a lot of debt in there, so how are they going to do it? Because then there's still that liability that someone must take. So it'd be good to see some of the big corporates that are doing well come to the public market, but I think there are more which raise questions. The other thing is some of those companies also need capital themselves for them to grow. So if government then takes all the capital, yet you need to expand, you're working in a very different environment, you have their own investment plans for those companies. So you may find that they are not able to optimize. So quite a lot of work has to be done to ensure that when they raise capital, there's a proper mix between money that stays for investment and money that government takes off the table as an investor. I think when I reflect on the privatization journey Kenya has taken, I think, to my mind, the result is mixed. You've had some very successful privatizations, and you've had some which have not worked. And ultimately, it comes down to what sort of governance that you have in those companies and the strength of the leadership teams. So you can stay in government if you have a very proper management structure. It can still work successfully. You can privatize and still end up having challenges. So really, it's going to come down to who is driving the strategy of those particular entities. I think there are two areas which are of obviously great interest. One, the Big Four stimulates investment activity. So our advisory team is out there helping clients on how to actually structure specific transactions to take advantage of that opportunity in sectors like manufacturing, in sectors like healthcare and the like. So that is immediate, it's ongoing, and you're seeing a big push in that. The second area is to then look at what's going to happen on the downstream, especially around some of these funds that may become available. That's one. Two, as people spend more and as incomes grow, then they're likely to also want to save more, because the savings is a function of rising incomes. So how then do you grow your customer base to be able to capture that, call it a growing middle or emerging middle class? So a lot of our thinking is around those two areas. Thirdly, to the extent that any of these funds are channeled through new financial instruments, getting tradability of those, then it can also support our securities trading business. I think that is a bit more far-fetched than the other two, which I think are more immediate. What I'm seeing happening if you look back over, say, the last 15 years, in large part, I think due to significant infrastructure investment, a lot of people have become wealthy, in part because of the growth in real estate prices. And if you just look at what's happened, whether it's in Nairobi, in Kiambu, in Kisumu, people have actually grown wealthy. Two, for a lot of entrepreneurs who started businesses, say in the last 15 years, they've gone through a series of transactions, whether it's raising capital, selling their businesses. When I started my career, it was a swear word to even talk to people about whether they'd consider selling their businesses. But today, it's become very common, and that has helped unlock the investment, which was previously, in a sense, idle. No one ever started out businesses that they're thinking they're going to sell them to make money. But now that is generally accepted. So what happens? You've run this business, or you had 20 acres of land, you've sold part of the land. Then the question is, okay, you take a bit of money and you sort out one or two things, but then you're left with X shillings. So what do you do with it? And not everyone is an investment expert. And I think that is what has really driven the private wealth, as people have seen their incomes rising. And generally speaking, I don't think Kenyans are very spendthrifts, you know. When you look at even a lot of the very wealthy people, you know, they don't own private jets, and so a lot of their money is actually available for investment. So it has been very natural that private wealth would. When I look at the capital market industry, there's been a big push towards product innovation, whether it's derivatives or short selling or REITs. So we're trying to address a lot of those problems at that level. But what is our success rate? What is the uptake of the new products? Are we able to bring in significantly new local money into these products that we are creating? And for me, that's the challenge, that there's a lot people are trying to do, but it's not gaining the right sort of traction. What's the next big thing after, say, an M-Pesa? You know, are we going to stop there as industry? Now, M-Pesa came up through telecoms. What about we in the investment industry? What's our next big thing? And how do we make it work? How does it then connect with the 45 plus million Kenyans? The performance has improved significantly. If I compare 2017 and 2018, I think 2018 has been a sea change. And I think we're certainly on the right track. Obviously, you want to achieve certain things quicker, and maybe that's where I kick myself a bit. But I think we are certainly on the right track. Losses have come down significantly. And working towards converting that to be a profitable and fast-growing business.